You're tuned into the It's Real podcast with your hosts, Kayla and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
Welcome to episode 72 of the It's Real podcast. I'm Kayla and I'm a mortgage lender.
And I'm Andrew Yagi. I'm a real estate agent.
Hi, Andrew Yagi. How's it going?
It's going really good, Kayla. How are you?
Good. I think it's a small town thing because every time we reference people from our hometowns, we always say first name, last name. Is that a thing like where you're from?
Yeah, I think it probably is, or referring to someone by their last name or something. Or I mean, sometimes a first name basis, just because, again, if it's a small enough town, you probably know who the individual's talking about.
Yeah, maybe. How's life? What's new in your world?
What is new? I don't, just kind of anxiously awaiting, spring weather. It's been nice to see the weather kind of gradually improving a little bit and kind of back and forth. I felt like, we had such a nice burst of weather and then it's kind of been cold again, which of course is par for the course. So I don't know, things have been a little bit touch and go, I would say, in the real estate market. I mean, we're listing more properties, we're having more conversations with people, but activity's been up and down a little bit. And as far as life, not much, just kind of the daily, weekly grind of kids and school and activities and community related stuff. I headed down to Phoenix for a couple of days for some King Air, one of the aircraft I fly, for some recurrent training that we've got to do once a year to kind of appease the insurance company. And I was looking at the weather and thinking, wow, it's going to be in the 90s down there. And
lucky. What's the UV index?
Which will be kind of nice. So yeah, it'll be nice to get away for a few days as well.
Good for you. That's awesome.
How about you? What's new?
Dabble in everything. What's new? Nothing crazy. Well, I actually am flying this weekend now that I think about it. I mean, I'm not flying, but I'm going to have a pilot flying for me. We're going to Denver to see my sister Brittany, my other sister and I and my nieces. We're going to the Kelsey Ballerini concert in Denver on Sunday. So that's exciting. Something fun. I know usually Kayla's working or working at the lake or something on the weekend, and now it's something kind of fun. So that'll be a really good time.
Good for you. I'm glad that you're able to get away and actually do something fun and, not just go to a conference or event.
Yeah. Well, in due time, Andy. But other than that, it's been really picking up for this time of year. I'm seeing it personally busier than last year. But, I don't know if you're in any, Facebook groups or with other realtors or lenders. I'm seeing it's wild how many people are slow. And I just think that, over time, things accumulate. You work on your reputation, you work to show people your value. And I really think that, the people that are busy are the ones that have been in it for a while or they've really worked hard. It's been a grind. It really has the last few years. And so our team is really quite busy running numbers, new construction, Fargo, West Fargo, Horace. There's just a lot going on. So we're grateful.
Speaking of that, so I've seen a number of posts. I try not to follow a lot of the groups because I feel like there's so much negativity and it's, you can doom all day. But I do see a number of individuals, and I saw one individual who does a lot of coaching, just, kind of talking about, hey, I see you out there. I see, all of the issues and, whatever it is that you're having, keep going. And yeah, I think there are a lot of people out there that are struggling. But again, there are a lot of people who aren't doing, the necessary tasks to kind of, affect their business. And so like in your case, I mean, you've been at this for a long time. You've built a business of attraction, which I love. And I was just actually looking and kind of laughing at laughing in a positive way at kind of your Charlie's Angels-esque post, which I'll call it. Why your mortgage lender may ruin your chance at getting a home. And I love it. You're talking about, lenders having a reputation for delays, poor communication, weak pre-approvals. You're writing an offer in a competitive situation. It might make or break your experience. And kind of the same thing with agents. We see certain agents who really, are known for not, having strong attention to detail and and even like as I built my business, and again, used a lot of video and marketing strategy. I have a lot of people coming to me as well, which is really, really
Mhm.
awesome. These individuals that are coming
Yeah.
and uh, and saying, "Hey, you know what? We want better. We really love what you're doing." So it's really fun, and so I'm not having those problems, nor are you. That everyone else is having, especially you, Miss Career shattering numbers in
Oh,
March.
maybe. We'll
February.
see. We'll see what we'll do. But, I was thinking a lot about it on Friday, about the whole like, okay, the house is listed at 500,000. It's not just about going in at 505,000. It's not just about the program, conventional versus FHA, for example. Conventional is usually seen as the varsity versus FHA is the JV, as we kind of say in mortgage, when it comes to what the sellers see. But I think it's just important now more than ever. And we talk about it every time, Andy. And it's like, who is the realtor that's on that representing the buyer? Do they communicate? Are they great at attention to detail? What's their track record? What does that look like? Also, the lender, if you're a listing agent, which Andy, you are quite often, and you see someone from out of state, not local, you don't know, you basically
Mhm.
say to your client, listen, they probably do okay, but I know this lender here, always successful. Is it worth the 5 grand more that other person's offering? It's just a very unique way to think about things. And I had seen that a lot last week. And I had a woman yesterday messaged me and she's like, the relief I get when I see a pre-approval letter from you. And I'm like, that makes me feel good because that then should make my clients and the realtors I work with feel good. And it's just little things that the consumer doesn't know. And that's why I made that post, because now more than
I
ever,
love it.
it matters. So
What? Hey, one really quick question. One of the events you had gone to had kind of piqued my interest, and you were going to give me more. What event was that you were at?
Oh, I bet that was the Forward event, probably.
Forward. Yeah, I was going
Yeah, I
forward.
think that's the one I went to last July.
Mhm.
That was incredible. It's not about like mortgage and real estate, although the
Mhm.
audience is mostly um it's so much around marketing, psychology, and innovation. So it's a really cool opportunity to go if you can.
Speaking of events, I think I sent you the information on Hatch Summit in Fargo.
Yes.
And, I know there are a lot of people that overlook local events.
Mhm.
There are, again, especially when you're in a competitive landscape, nobody likes the competition. So I know there are a lot of area agents and probably individuals that say, well, Hatch Coaching, owned by Eric Hatch and Hatch Realty, like, boy, we're not fans or whatever, so we're not going to go. But I can honestly say, out of all of the events I've been at, it was really a well done event with some really awesome speakers, Kayla. And
Mhm.
it's going to be coming back in June. I would really love to see you and actually some others in the Fargo area there, because even there are a lot of individuals who aren't even in real estate or mortgage,
Yeah.
that come to that event. And there was one individual there last year, John Shin, who's mega wealthy financial advisor. Really learned a lot from him, and Shane Hips, who big into leadership and development, who's also kind of getting on board with some of the financial stuff. Totally reshaped how I think about money and some of the stuff that I did. So I would say, if it fits your schedule, I think it would be awesome to go, because it really is a quality event. And even for you, would be a great networking event, because again, there are a lot of people who are, not active working as a real estate agent, like Andrew Abernathy was there.
Yeah.
I saw like Alex Rydell, who well, now owns Hanson Runsvold Funeral Home. His wife, who works at Thompson Homes, she was there. And so there are just even a lot of people, Tyler Leverington, who's an attorney,
Yeah.
up there. So kind of a really, really good group of people.
Well, I think too, it's like we're all, whether you work for a company or you work, at a real estate company, or you are a realtor, or you own your own brokerage as a mortgage lender. It's like we're all, technically like have an entrepreneurial mind in some way. Like we're all trying to be better and adapt to AI and technology and find better ways to help our clients. One of my colleagues just got me this book, Unreasonable Hospitality. I don't know if I brought
Mm.
this up to you, But I'm like, how do we
I've started reading it at least.
Yes, and I haven't dug in, but I'm like, that is what a lot of people like you and I, we want for our clients. And so to be around that even locally, it's not just about being in real estate, it's about just that same mindset. So I wrote that down again, Andy, and I'm going to look into that. Hatch coaching June.
Be there. It's a good event.
Or be square. Okay.
Yeah. Well, Kayla, so obviously you mentioned you've seen some uptick in activity in the mortgage world. What
Yep.
are rates doing this week?
This week they're up a little bit. We started last week looking a little bit better. We were down maybe an eighth in rate. Today, the 30-year fixed national average is 6.8 on a 30-year conventional. FHA is right around that 6.25. We're seeing North Dakota housing rates haven't moved at all, but a lot of people, it's like, what is this quarter, doing in your payment, and so one of the things I'll ask a client is if they say, hey, I really want 6.5, I'll say, okay, why is that? And if they can't articulate, which a lot of times they can't, and that's okay, well, we need to break it down for them. The 6.5 is this per month. The 6.875 is this. Are you willing to write it out? Because some of these people, Andy, they're getting to the point where they have to lock. We're at the end. We need to lock. And if rates go up a little bit, they're stuck. So it's kind of a game, to be honest. But, we watch forecasts. We make sure that we keep top of mind, what's going on in our industry and, look at any economic data we can. But, all we can really do is provide updates and advise. But we've seen them push up just a smidge, nothing earth shattering, but enough to make an eighth to a quarter difference in a payment, for a month.
And I saw kind of in your weekly email that you sent it. I mean, obviously the actual rate's going to depend on the lender, and so and of course subject to underwriting and credit and all of that. They're on average better than the national rate. But the thing that I saw that was kind of cool is you guys are running kind of a awesome promotion right now for people doing new construction. Talk about that a little bit.
Yeah. So, when you have a new construction home where the builder is not carrying the financing, meaning when you build a home, a lot of people don't know this. So I kind of wanted to just talk a little bit about it is when you're building a home, like my husband and I, we built a home, but Heritage Homes, they carried the financing for everything until the date that we moved in. That's the date that we got our loan and brought the money. When your builder does not carry the financing, you are required to fund the build as you go from start to finish. So we're offering a 4.99, so 4.99% rate on new construction. So if anyone is interested in hearing more, reach out to me. I can happily explain how that all works. But essentially, you're paying 4.99 until the house is built. Once the house is built, then we do permanent financing. And that's where like the 30-year, the 15-year would come in at that point. Usually that 4.99 is about a 1-year rate that you get until the house is built.
Very interesting. I think my wife would be very interested. She really wants to build a home, and I've been looking, especially fresh off of building a spec house, and just crazy it costs to build a house. But again, a lot of good knowledge, and again, the biggest problem we're having right now is finding a spot to build that kind of suits all of our parameters. Because again, it's not like Fargo where we can go down to Horace and we can go over to West Fargo to the lights or whatever. I mean, you've got so many opportunities. We don't have that. So it's a little bit more of a challenging situation, but that is a really, really great. I mean, I don't think I've seen a promotion that's as good as that when it comes to new construction.
Well, thanks. We're excited about it. And it's great for the client, but again, just it's not the 30-year fix, it's not the permanent, but it's really nice to be able to have a more affordable payment as you're financing it. Because you're technically paying, it's like a credit card, I tell people. You're given this line of credit for $500,000. What you advance, that's what you pay on. It's interest only if you want. And so it's a really great option, and it just saves people a little bit of money, which who doesn't love to save money? I do.
Yeah, absolutely. I think we all do. So speaking of saving money, Kayla, I saw this article that came out. We talk rates a lot, and of course, it's one of the most important pieces, when someone is pondering a purchase, because obviously that greatly affects purchasing power. And there have been a lot of things going on since the Trump administration, took over, and a lot of that focused on cutting spending, cutting waste, making government smaller. Obviously, there are a variety of opinions, on that for better or for worse. But I think they're trying to do the best they can, to take some pressure off. And with that, we've been talking in regardless of administration, been talking about where are rates going, where are rates going. Here are all the predictions. Here's what the Fed says. And then this article came out talking about that the Fed is making a move to take some pressure off of mortgage rates. And so I think as it started off, of course, the government having Fannie and Freddie. The government is about the largest mortgage lender out there, or financier, so to speak, of mortgages. And so along the lines of cutting debt, the government has been talking about getting some loans, some government-backed loans off of their balance sheet, to cut down on debt. And of course, that was a hugely positive thing. The government stepping in with great programs, great low rates during COVID really helped stimulate the economy, likely caused home prices to greatly appreciate. But now they've been talking about getting rid of some of that. Well, and this article just really talks about there may be slowing down, shedding some of the government debt from its books. Down to 5 billion a month starting in April, down from the pace of 25 billion, because I think people were starting, to get spooked a little bit. Can you talk about that from a lender perspective at all?
Well, that article, 25 billion to 5 billion.
25 to 5.
Isn't that wild? I just saw that in that article. I hadn't seen that before. That's wild. So do you relate that to Trump just kind of getting in and just kind of cleaning up, like, hey, this is what needs to go, this is what needs to stay? I mean, that's significant. But I think a lot of people put their stock in what these Fed meetings mean. And when we look at Barry Habib, who is like the king of mortgage, basically, we follow him daily in our world in mortgage. I mean, at the end of the day, we don't know what's going to happen. I think that the Fed impact, I mean, if they're telling us that, they're going to relieve pressure, it's a matter of when and how much. And do you remember last year when it was like, I think, last year, there's going to be 6 rate drops in 2024. And I don't even remember, were there 2? And they were by maybe like 8. It wasn't anything significant. So those listening to this, does that mean that the Fed is going to directly reduce interest rates? Maybe. When the Fed cuts its benchmark rates, then it becomes cheaper for banks to borrow money. But then in turn, we can offer lower rates on mortgages. But obviously, that's going to make it more affordable to buyers. But the question is when and how and how long. I'm a little cautiously optimistic about that. And so I would say I'm curious to see what happens, Andy. I'm curious what's going to happen. If it's an article, there's going to actually be some action. So kind of a middle line response, but what are your thoughts on it? Do you feel like, I guess, to be honest, I'm like, are they going to follow through with what they say or what the news says?
I don't know. I think it's going to be a really interesting ride this year, just across the board, as it always is when major changes are made. I mean, I think we all know that, just from from a fiscal standpoint, we can't continue spending the amount of money, that we do and keep growing our deficit. I look at my kids, growing up, and it just, we're on a very unsustainable path. So, and, consumers are really worried too, if we jump back talking about housing, worried about tariffs, meaning that, we're going to see higher prices for housing, for building. So we'll see kind of what happens, but I do think there do need to be some tariffs, however, not at the expense of, the economy, overall falling. But yeah, I do think that the government probably does need, shouldn't be spending money on some of the things it does. And interestingly enough, there was kind of another article, Kayla, that popped up, kind of similarities that the Trump FHFA could rein in Fannie and Freddie and their high-end lending. And this even talks about the fact that by doing this, especially as it pertains to home prices, it could maybe relieve pressure on home prices overall. Have you read anything on this yet, since you're kind of a lender?
Just a little bit. I think people are always curious when what's the difference between a jumbo and a conforming loan, and really there's a loan limit, 806 500. If it's over that, it's more risky, right? There's going to be more red tape. So I wanted to just clarify for anyone listening. You might hear the lingo jumbo, like what's a jumbo loan? It's basically a loan amount over a certain threshold, and every year it typically changes. In terms of what impact will be had with home prices, that I can't speak on, but I would say that when clients are getting a mortgage, they take that into account of, do I need a jumbo or a conforming? Because typically, Andy, because it's riskier, a jumbo loan is going to have a higher interest rate. So, and that's based on county. Like a California jumbo loan limit, it's going to be different than a Fargo, North Dakota. So that's kind of the difference between jumbo and conforming, just for our audience to know. But in terms of how it impacts prices, I would just say I can't speak eloquently on how it would impact prices, because that's what that article is about.
Yeah, I think what it's alluding to is, because again, the government is in the mortgage business, they are subsidizing, mortgages more or less. So because of Fannie and Freddie, you can get a cheaper mortgage than I could walking in the door and getting an in-house loan at First International Bank and Trust, correct?
Yes, and typically, Andy, it's going to be, probably a different term. It's might not be a 30-year fixed. If you go and get a private loan or a loan, locally, it's usually going to be probably an arm, or you might have to pay more fees, or the rate's going to be higher, because there's a lot of companies that are not set up to be able to handle servicing and underwriting and basically keeping the loan on their books. So in turn, yes, those private lenders, you're going to see a higher rate and probably not as favorable terms.
Yeah. So not as favorable for the consumer because you're losing the subsidy. But I think part of the argument is the government shouldn't be in this business subsidizing loans. Again, it was really great, during COVID. I mean, I love my 2.375 refinance rate that I have on my house. But the argument I think they're trying to make is that this is artificially pushing prices up because people can get a better rate. They can afford to pay more. But it's limiting competition with private business and private lenders. Would you agree?
When you break it down like that, that's how exactly I can see it. Is when you think about what rates we're at and what prices we're at and where they're at today, I spot on agree. And I'm just curious what the next year will bring, especially people that are at that point where they're like, I need a new home, I'm busting at the seams. I've had more conversations with people that are like, I need to make this move. Now's the time. And they're going to be getting rid of that rate into a higher rate. But I do agree with what you're saying, is that can definitely impact prices. When you think about a
Well,
2.35.
obviously, living here in the United States, we're used to how things are. But I look at like just in the north in Canada, which maybe will be the 51st state if Trump has his way. Probably not. But it is interesting. I've been taking some flying trips to Canada, and so it's really interesting. And actually, just having been in Mexico, just kind of asking, what the perception is of Donald Trump and everything. And I would say it's overall not great, although there are some people that do have positive. But I think our cab driver in Mexico, who didn't speak really any English, he said, "Oh, Trump es muy loco, very crazy."
Oh,
Crazy.
well, that's because they can't come over the border for free now. Sorry.
But up in Canada, my understanding is a mortgage up there, like you don't lock in your rate for the life of the loan. It's year to year. It's adjusted. So you basically have your rate for 1 year, and then hey, whatever the market does, you may get a lower rate, you may pay more.
Well, and two, I've heard, now don't quote me, but that the United States is one of the only countries that has a 30-year fixed. And there are some 40-year fixed out there in certain areas. And it's like, we are pretty darn lucky if that's what we're able to be exposed to. But could you imagine your rate changing every year on a $600,000 loan amount, 400, whatever that may be? Like, that sounds terrifying.
Yeah, because I mean, if it goes up, I mean, there could be impacts and other things like employment or income, and when you need it less. But I guess that's just how the market works.
Yeah. Oh, interesting.
Yeah, very interesting. So, well, stay tuned. We'll see.
Yeah.
Kayla, I want to talk about kind of one final topic today, and in real estate, we've seen a lot of changes in the real estate industry this last year with some of the commission-related lawsuits. Again,
Mhm.
for those who haven't followed it, there are some individuals, and it's even reached a class action status that have asserted that there is, basically antitrust behavior, taking
Mhm.
place in the real estate industry, especially as it pertains to commissions. And, quite often individuals have asserted that, nationally you're going to pay a 5 to 6% commission. The seller's going to have to pay all of it. There's always something for the buyer's agent. And so commissions were effectively decoupled. As part of that settlement, it's been required now that anyone that goes and looks at a house has to have a written buyer's agent,
Yeah.
buyer agent representation agreement in place, or a touring agreement, which has been kind of interesting, just
Mhm.
because we've seen some individuals that have talked about, well, you're basically putting buyers under duress, like they haven't even met you, they want to look at this home. Some have equated it to requiring someone to get married and sign a marriage license before even meeting the individual. And so, how do you know? I mean, and that's maybe a little bit extreme, but how do you know that you're going to like an agent, or that the agent isn't a total
Yeah.
buffoon or something, and now you're committed to them? So, kind of some interesting news that came down the pipe in Alabama is that Alabama law is going to allow buyers to tour homes without an agreement, and so kind
Hmm.
of going against this legal settlement and this National Association of Realtors piece that says you must have this in place before you go tour a home. It's not going to be required in Alabama. What do you think about that?
I'm very curious about that. So, why isn't that everywhere then, Andy? Like, help explain that. Like, how are they able to do that? Like, what's
Well,
the
so
difference?
I think the state put the law into place, and so basically we have a trade organization, the National Association of Realtors, that says you have to do this. You never had to do it before, but until this settlement, which took place last fall, and so
Mhm.
now it's been required. Well, now Alabama's saying no, and I would predict that this will probably take place in other areas where other states are going to say, you know what, Alabama's kind of onto something. Like, this doesn't make a lot of sense, to make someone have to sign their life away, or, again, even sign a touring agreement, because even the Department of Justice has been kind of watching all of this, and the Department of Justice, they have interest, um, and so they're basically listening, to the DOJ, and the DOJ is kind of questioning this a little bit as well.
Mm, interesting. So, do you get a lot of pushback when you ask a client to sign the form that says, "Hey, we're required to have you sign this." Are you seeing a lot of pushback?
A little bit, and maybe more pushback in the form of crickets, of not hearing back from the individual. And I would imagine there are some individuals that, hey, they're just reaching out to the listing agent in general and just saying, hey, listing agent, the listing agent you don't have to sign an agreement to have the listing agent show you the property, because they're representing the seller first and
Mhm.
foremost. They can technically, depending on the state, be a dual agent and represent both, but they are working for their
Right.
client in showing someone the property. So I don't know. It's just going to be interesting, and again, it's probably something that isn't as much in your wheelhouse, but something
Mhm.
that I wanted to share
I
and throw out.
I like that you share that because a lot of people might not realize that before you do see a home, this is required now. But it also, Andy, allows you to kind of vet out people. Are you serious? Are you pre-approved? Like, there are still realtors that might show homes with people that aren't pre-qualified yet.
Yep,
And,
there definitely are.
and I'll have a client that will resist doing an application. Well, the application allows me to analyze, which then allows me to prescribe and diagnose. So if I don't have that application to pull credit and review your scenario, then it's really hard for me to help you. I feel like it's just kind of similar for realtors. It's like, hey, are you serious? Because you're asking the seller to think, if they've got kids and dogs, to get their house perfect and move out. I think it's just more of a, how serious are you? When you book an appointment with a doctor, I think the same thing to an extent. So I like that the form is in place. Is it maybe the swing of the pendulum further than what it was? Maybe. But I'm curious what other states will do, Andy.
Yeah. Well, time will tell, but it's just always interesting to update people because there's still a lot of confusion out there in real estate. But
Yeah.
anyway.
And we learn every day. There's things that I don't know day to day that I'm like, I have to research this. I need to know more about this. So for us to expect consumers to know, I think it's great to share little things like this.
Well, Kayla, I'm up against the clock today, so
Same.
it's been great connecting with you. I hope you have a great rest of the week and enjoy your trip this
Thank you.
weekend.
You do the same. We'll talk soon, Andy.
All right, see you, Kayla.
Bye.